Hello, welcome to the weekly review video. This is for the week ending August 14th, Friday, August 14th in 2026. Saturdays are for reviewing the week that was, so I'm going to make a video doing just that today. I'll probably stick on PowerPoint and we'll just kind of like look at the screenshots that I took over the week. I've kind of just curated my weekly journal. I use PowerPoint for journaling, which makes it convenient then to just curate those slides for this video. So just an overview that I wrote this morning. I had predicted that we would have a bullish week for FX, and that's what we got, which is good. However, this was actually a little bit more of a difficult trading week. If you traded this week, you know, because we have probably one of the most difficult market profiles, the so-called seek and destroy profile. So what happened was we're essentially, it's like a hangover from NFP, where NFP created this very large up close candle, and predictably we get like a pause CRT period into Wednesday. Wednesday morning at 8:30 a.m. was the U.S. inflation data release, so the huge red folder news release that was anticipated. Now, what I anticipated was the pause CRT into Wednesday morning. Okay, all that's good. You get long in advance of the CRT, and what happened, sorry, not you get long in advance of the CRT, you get it long in advance of the CPI. And what happened on the Wednesday morning was a little bit of a surprise for me. I was thinking that we would have slightly cooler inflation data, but in fact, the inflation data was as hot as predicted, or maybe even slightly stronger. And so what this was in the very short term was bearish for FX. So CPI itself, it formed an upper wick. The initial reaction to CPI was bullish, but between 8:30 and 9 a.m. we immediately reversed. And in fact, I'll probably get on Brave and I'll show you. We'll really look at Wednesday, because Wednesday was probably the most difficult day of trading for the week. And if you were just sitting back and you didn't trade into the news and you waited until like the 9 a.m. candle close to then look for entries, you were doing pretty well, because at that point on the lower time frame you had bearish turtle soup entries, and I can show you those. And what we did was we actually manipulated rather, so this bearish reaction to CPI kind of late Wednesday into Thursday, and then all throughout the trading day Thursday it was bearish. And then it wasn't until Friday future open, Friday Asia in a lot of assets. Well, I'm basically talking FX and precious metals here. That's when you actually get finally on Friday, you get a bullish turtle soup. And so Friday really was the first distributional, it's probably on the lower time frame, it's not on a daily time frame, but you had a distribution phase on Friday begin in let's call it 8-hour and 12-hour turtle soups. And so you get a really bullish day on Friday. In fact, between the lows on Thursday and the highs at the end of the week, so market close on Friday, that's the entire weekly range. So in other words, if you were just to look at the candles between Thursday and Friday, that would actually encompass exactly what happened in the week. So ICT used to call this, I don't know if he probably still calls this, a seek and destroy profile, where the time period in question, in this case it's a weekly candle, it starts out expanding like a wedge, and then it's the very end of the candle that you get. So this price action is more characteristic of an NFP week, to have Friday be the daily candle, the final distribution candle. So it's just really funny. Really funny week of trade. A little tough on Wednesday for me. Wednesday into Thursday was a little tough, and I can go into. I actually had a loss in natural gas. I can go into that really briefly. So I mentioned that Friday, obviously, we have our NFP reaction, and this gives us the hangover. And the hangover is essentially all this internal liquidity. And so for the Euro USD pair, it's going to be internal sell side liquidity needs to get ironed out. And so we slowly iron it out between Monday and Wednesday morning in a pause CRT. You can see that I've got these internal targets here in the pound and the euro. This is the pound right now. And the pound actually doesn't even get this far, I don't think, by Wednesday. I think the pound, it kind of flattens out and it just does a complete sideways range above 134.78. I remember 78 being a level to watch on the pound because those Thursday lows, we nab those and then price goes higher after that. Here's the yen. So the euro, the pound, and the yen had slow pause CRTs. The yen is actually kind of continuing its pause CRT on the higher time frame. So a few weeks ago, now it's getting on. Actually, you know what? I'm sorry. It wasn't really a few weeks ago, was it? It was. So August 7th was NFP. Yeah, so it was just before the start of August. It was July 31st. We had this, if you're a macro person, you know exactly what I'm about to tell you, but we had intervention in the exchange rate between JPY, which is the Japanese yen, and the US dollar, so USD JPY. The US Treasury Department was essentially intervening in the market and going short. It's complicated. It has to do with the US Treasury market. This video is not really the place for it, explaining it. If you just Google yen intervention, Scott Bessent, he's the current US Treasury Secretary, you'll probably get a million videos of the macro talking heads reviewing it for you. But long story short, from Monday the 9th, from Monday August 9th until Wednesday, and this is so really all of Monday and into Tuesday here, we have a very slow losing value. We have a very slow depreciation versus the dollar. And so how I traded this was I actually traded this with some algorithms. Actually, just one. I have a grid trend scalping algorithm that I don't have to sit in front of the chart and do the lower time frame scalping. I just correctly identify the pause CRT and I set and forget this one algo. It's really easy these days in 2026 to have an algorithm. It's really easy. It took me literally 1 day to get it created, get it implemented, learn the ropes, and just start using it. So anyways, that's from Monday until Wednesday, pause CRT. So now we can get into Wednesday morning. And Wednesday morning, so this is silver. This is a chart of silver. Look at this disgusting CPI response. So oftentimes when the news is exactly what the economists, I think they call them the Bloomberg economists, which is essentially the panel. It's not really, is it the Bloomberg economists? Anyways, there's a group of economists that belong to a list. They're all on this list, and the list is used to create economic projections to then have a framework to use when the news actually gets released. So with CPI, you're essentially predicting. And a lot of them use econometrics, right? You're in models. And so it's essentially saying, well, what are the economists' models predicting what the July inflation should be, which is released in August? And so the price action, this is Wednesday's price action. It's like this doji that forms instantly. So what happened is within like the minutes of release, within the first few seconds of release, you have a stab downwards into sell side. And then within a few more seconds after release, you have a quick, some stabs upwards into buy side. But the whole thing kind of makes this doji. And then you're left with, an immediate response. So it's not quite like NFP was, where if you go back to the 9th, which actually isn't on this chart, in the currencies in NFP, I mean, it just bang, it immediately makes a bullish candle, right? You have this weird delayed thing where, it creates a data wick high or low, and then a lot of times markets will actually trade back into that the same day and then go lower or higher. But this day, all the data wick highs were left. It was just a really like funky day to be trading. So immediately post CPI that afternoon, you could have gotten short things because of the bearish turtle soup. And so the bearish turtle soup into the CPI was, it in precious metals, it was really obvious. So this is silver. So here you have this aggressive move lower and then a pause CRT. And then you get CPI itself was an entry opportunity. So if you had orders during the wick to be short, and then you had your stop loss like a reasonable distance, then you would have been just fine shorting CPI, provided you had a wide enough stop loss. But so in fact, in the London session, you could have got short in the London session, model number 1, bearish turtle soup, and then just rode through the CPI, through the noise of the CPI. And obviously you might get some drawdown if your entry was right around this key level, this like 66.48. But anyways, here's my trade that day. Was that afternoon, basically into the London close, I get short, just because the initial distribution was only at that 9-hour phase. So I'm basically thinking, well, if it's only 9 hours, and I mean, that ends before that trading day ends. So yeah, overall, we're bearish. Actually, the 1 day, 1 day, 6 hours, So there's even a higher time frame bearish than this. There's even a higher time frame bearish, because we end up getting. So here's a trade I took. This is the trade that I took that afternoon, but there's a higher time frame. There was a higher time frame bearish model at work, because we actually get a failure swing. I really thought it was going to take out the data wick highs and then move lower, but it left the data wick highs on silver. And it's a classic failure swing, because we have this grind lower after CPI as markets digesting the move, and then you have a bullish range. This right here is a 2023 bullish turtle soup, and it fails into this order block. So if all the up and down price action of CPI created that lower time frame order block, and then you have this rapid distribution and it fails deep. So this is like essentially an OTE entry. This is like an OTE entry, a breaker entry. And then immediately we rip lower, and I actually get out like here. I got out here. I think it was because I didn't want to stay up overnight a lot. That's a lot of it. But if you think about it, I was getting out way too early, because if you think about this range here, this is, I can't drag my price tool here, but I was getting out like in the middle of this distribution, and that's exactly what it turned into. So here, let's go to Brave really quick. I'll show you the rest of the distribution lower in precious metals. Pretty insane. Let's see. I might have to go to my streaming software. Okay, so here is. Okay, everybody can see Brave. That's good. And then let's switch over to it real quick. Yeah, so here's the euro. I'll go back to the euro as well. I'm going to do like a real comprehensive review of this week. So yeah, I'm on the monthly. You're getting a sneak peek of my next you're getting a sneak peek of my planning the week to come video. But yeah, so CPI was on the 12th. Okay, so here's CPI. Here's the data wick highs. I've got them highlighted. They haven't been tapped into yet, which is why I'm just going to leave the annotations up. I'm not going to do any annotations here. But I see this failure swing. So this is a bullish 2023 turtle soup, but then it fails. And so it's like this super aggressive failure swing into a super aggressive retracement. And I was out. Even before the 9 p.m., even before 9 p.m. So like, I think it's 8:30 p.m. is when Tokyo opens, but I'm literally getting out on the open of Tokyo because I'm like so tired. Like I had traded CPI. I have a day job. I work 40 hours a week, and I was still trading into that same Asian session. And I was just kind of like saving my mental capital and saving my energy. And so I actually closed a trade there, but the reason why I wanted to go to Brave is because I wanted to draw this price range, and I just wanted to show you how so we could let's use CPI, the CPI order block as the origination candle, because that's the point of this, is we stabbed into that. It's 126 bars. Okay, so just doing the quick math there, the ratio of distribution that you would expect. Oh, so maybe I didn't quite get out too early, so maybe it kind of times out there. But anyways, I would expect like around 45 or 43 for the distribution. Yeah, so actually I think I was right to get out at those lows, just thinking that's it. We hit our lows, yeah, and just not getting greedy, because I think there was a bigger model maybe at work, like if you had taken, yeah, this whole thing. Let me go to the higher time frames, and precious metals was just fascinating this week. It's so funny. It's like I was expecting to trade FX all week, and I ended up trading a lot of precious metals. But so we stab up into this. So if you take this long wick as an order block, we stab up into that order block there. That's what CPI was. CPI was like a real gut check in precious metals. We had hit, I think going in, so it was gold was a really big tip off, because $4,450 per troy ounce in gold was a really key level, but in the renminbi, an even more important key level got hit. It was 30,000 even renminbi to buy 1 troy ounce of gold, and they didn't even let it get. It never even hit 30,001, and I think there was intervention. I honestly think that there's intervention in the precious metals market, whether it was like just the banks themselves in China, or it was the actual central bank, the People's Bank of China. But there was a lot of gold selling in advance of the 30,000 even level. And I talked about barrier options before, but the Chinese central bank, they're famous for using barrier options. They go on like barrier option shopping sprees all the time, because they have what is ostensibly a floating exchange rate with the dollar, with their offshore currency, the renminbi. But anyways, so this is all tightly controlled. Within every single day, as the Asian session starts, they announce a dealing range, and then with the explicit knowledge, or with the in announcing the dealing range, they're basically saying we're going to use options, barrier options, to guard it on the sell side, so that the yen doesn't get too strong, the renminbi, the yuan, the offshore yuan, and we're going to guard it on the buy side so the yen doesn't get too weak. Every single day they do this, and so like nothing within this chart is accidental. It's literally like a planned economic vehicle for them, just like their GDP, their exchange rate. And gold has become essentially part of that apparatus. So gold, in terms of renminbi, when you start to get to key levels like 30,000 even, you need to be really cognizant of that. And it was that Tuesday, sorry, I think it was the Wednesday. Was it the Wednesday? Here, we'll go to the lower time frame here. Yeah, Wednesday, early morning Wednesday in Asia session. Right? So this is this is when like Shanghai opens, right? Gold is basically saying like bid, 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 bid. And then all of a sudden you get that short entry. And then, oh, I'm sorry, it's after. So this is post CPI. So yeah, so gold, we take out the, so it's this 6 a.m. 4-hour candle is CPI. So yeah, so CPI comes in as expected. It creates the doji. It creates the data wick highs in gold. I'll show you the data wick highs on the 30-minute chart. There's our CPI candle right there. Super awkward candle, right? Because it stabbed lower and then it closes higher. And then I think the immediate like minute chart response to it was an initial stab higher that never gets requited. Okay, so I'm wrong. So in gold, oh, this is gold in renminbi terms, by the way. Isn't that funny? Gold in renminbi terms, they take out the data wick high immediately. Let's see what gold and yeah, and gold in dollar terms they do as well. The data wick high gets immediately taken out. The data wick low gets taken out within minutes. But yeah, you essentially have a bearish turtle soup entry. Oh, I'm sorry, that was a wrong day. Here, let's go back. There it is. There's the CPI candle. Right there. Yeah, so it's the same though. Data wick high, immediately taken out. Bearish turtle soup entry the following session. So like this is Thursday morning in Asia, right? But yeah, you get a crazy move off the highs. So from 4,450, we distribute lower in gold all the way to 4,310. Like gold has been moving really dramatically, but yeah, that Thursday Asia into Friday, basically what was Friday Asia, was just a crazy distributional move lower. Like that's essentially the trade of the week in precious metals. Is like if you were looking out for that, the quick tap into external liquidity, take out the data wick, or it's not really data wick highs, but take out the CPI highs, the post CPI highs, and then just distribute lower. Gold actually had a really clean distribution as well. So in other words, if you take that model there, so that 1 day, 22 hours, well, actually it does take a bit longer, doesn't it? Because that's only 11 bars, I think, what you'd expect. Or sorry, would it be 11? It would be like 15. Yeah. So gold has that same thing. But I think there's a higher time frame model at play in precious metals. It's tricky. You have to, yeah. So I don't even know. I don't even think I'm going to try to trade precious metals next week. But let's go back to the PowerPoint. I got a little lost in the sauce there talking about CPI. Thursday we get bearish continuation in foreign FX. Actually, let's go foreign FX. Let's look at CPI and foreign FX, because the pound actually left its data wick highs, and those didn't get taken out until Friday. So this is like the seek and destroy profile. So you have Friday's NFP, pause CRT into a cumulative range, and then you have this little teeny manipulation out of the range in the New York kill zone Wednesday morning into a kind of like a wick, an upper wick high CPI that just distributes lower, and the lows aren't hit until Thursday's London session. So this whole thing is seek and destroy. And then Friday, and I actually didn't catch this I was long precious metals on Friday, and I was short oil. I was short WTI crude. So I actually didn't catch this in the currencies. It's so sad because the currencies were the ones to catch it in. And I don't know why I wasn't looking out for this, but I think it was just my mindset of Friday being like ebbing liquidity rather than. But in fact, I think CPI took a lot of people out of the market, and Thursday morning was a manipulation to allow them back in. Because I think that a lot of market participants were essentially saying, what if CPI comes in not just at expectations, but far above expectations, and we start to really see, because we're in a really sensitive moment in terms of inflation. We're in like a 2022 moment in terms of inflation. It's really scary. It's really, really scary. Just as far as the inflation genie being let out of the bottle again. So I think that people are treating CPI with a lot of due caution. So anyways, I saw this all over. If you go on Twitter, and I think there's I think it's called like a Twitter, what is it called? And anyways, whatever. It's the CRT Twitter group. I can't even remember what groups are called on Twitter. I literally only use Twitter to follow Romeo and look at these CRTs every now and then. But I saw that. I logged on Twitter on like Friday night, and I saw it was probably like, it was probably like 10 or 20 different CRT traders had posted. It's a daily CRT, right? Is it not a daily CRT? But it's also a Romeo 2023 model on, I think it's probably the 12-hour. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, it's the 12-hour on the euro at least. Super impressive model. So if that's the origination candle right there from Thursday of last week before NFP, we traded back below the NFP candle, and then we traded into the manipulation lows and beyond. So just a punishing seek and destroy. This seek and destroy is it's like a way of the market communicating to me about the way that macroeconomics is valued. It's basically saying yeah, the economy is important as far as jobs, but the real economic thing we should be worried about is CPI. Because the fact that the entire NFP week, which was bullish, not the entire week, but just let's call it the bearish manipulation into the NFP, that entire thing was taken out by the bearish CPI release, post CPI. I mean, the fact that we did have inflation that's heating up, and the fact that it was in consensus, right? Wasn't really a surprise. You didn't have a crazy violent, stab lower, like past that wick there, but at the same time, like I think the market's definitely putting a higher emphasis on CPI right now. So yeah, so that's here you have 10, 8, 12-hour candles, and then you have the 3 candles of distribution on Friday. A lot of CRT traders caught this. Beautiful trade. I missed it. I'll show you what I did on Friday here. I'll get back to PowerPoint. I was still very profitable on Friday. I just didn't catch like the poster trade here, like the printed out and hanging on your wall trade. Okay, so this was Friday. This is Friday in silver. I can only really trade like one contract of SI futures. It's like such insane leverage. But look at this accumulation. So like this is the post CPI reaction in precious metals, and then we get this like insane accumulation. So I'm sitting there on Thursday night, and I'm like, man, I could try to start scalping long, but I'm like, no. There's so much accumulation here that we are going to have this classic, like, you know, a teeny tiny 2023 bearish kiss of death there to get us short, or sorry, to get us long. And so I did catch this. I think I caught it. I'm not sure if I was in down here, like in the London. I think I did get up in the London and catch it. But that was my long for the day, was expecting silver to, and I screenshotted it there, but again, this distribution actually, I think it took us all the way up past, we'll look at we can go back to Brave there and look at silver. But yeah, we actually ended up getting a lot more bullish in silver as well. Why I cut my trades. I look for these models, and then I actually on a Friday, a lot of the times I'll cut my trades at half. I'll fully close at half the range, because I'm just so scared of the liquidity tide going all the way out on Friday and just getting stuck. Friday's crude short was a really cool setup. So I think this is what time frame is this? Yeah, this has got to be like an 8 hour. I think this is an 8 hour. But look at the 2023 model, bearish turtle soup into Friday, right? These candles make it look a lot cleaner. Yeah, this is. I already went over this. Geez, I thought I had another chart to show you guys on crude. So let me go through crude really quick. This is turning into a really long video, but that's okay. It's important to review everything. I'll switch back to Brave, and we'll go to the crude chart. Check this out. I guess was that the 4 hour chart that I was trading? Let's look. But there's some crazy price suppression on crude. So I was talking, man, it's really interesting how we're living in such interesting times with governments intervening in markets. It's just all over the place. I mean, you had that 30,000 level in gold, 30,000 renminbi to gold, and there was an intervention there. And then you have in crude, you have this idea of, I mean, look at just zooming out a little bit. This is like a 2 hour chart, but I can go to the 4 hour. Zooming out, clearly there's volatility suppression in oil. You know, and there's a lot of like benefit to it for the functioning of economies, governments, trade right now in the West. It's not surprising. You really shouldn't be surprised by it. But Trump essentially said it was August 9th, Sunday. So Sunday, August 9th, which on the chart we really can't see the weekend. It's that little new week opening gap there, which we'll definitely trade down into this. That's definitely a good little target if you are going to try to scalp crude to the downside. Trump has had, I think it was like an Axios. He was like talking with an Axios reporter on the phone, and then later on the thing gets published. I think like on Sunday night, and he basically says we're low keying it. We're low keying it was the phrase he uses in Iran, and it's basically talking about how like they've got these levers to put pressure on the regime, and the lever that they're leaving their hand off of for now is boots on the ground, take Karg Island, blow up a bridge every hour for 3 days type of stuff. And instead what they're doing is we're low keying it now, which is economic pressure. And I was thinking about a lot of commentary on this. So I didn't even really need to do my own research on this. I just like tuned in and listened. But apparently US break even is like 65 and Saudi break even is like 55 in terms of like their oil producers. How do at what price in the futures? Actually, it would be spot, I guess, technically. But at what spot price for a barrel of crude does it mean that it's economically viable to produce crude for that time period? And so, like, different countries have different levels. They have different break-even levels. Well, apparently, and this might be propaganda, but Iran has a break-even level of $165 a barrel now. So they can have other agreements with their customers, but they, I don't know. It just seems like almost unreasonably high to me. But yeah, apparently and I don't know if it's a break even or more. It's more like they need it that high in order for their society to properly function. And a lot of that's due to the other economic pressures. So keeping the price of crude down to as essentially an offensive economic weapon versus the Iranian regime, that's just one component of the pressure. And it's Scott Bessent, again, with the Treasury, kind of like overseeing a lot of these efforts. But then there's obviously like many other state players involved, not just in the U.S., but you would imagine many other governments as well. But anyways, Trump would actually prefer oil lower than $80 a barrel, which I think is a bit unreasonable. I also have another theory that doesn't really get thought about or talked about a lot, and that's the Venezuela break even. So the Venezuela break even is right around $80 to $83 a barrel. And I think that's a sweet spot. That is a sweet spot. It results in a national $4 a gallon in the U.S. national retail gasoline prices, like $4 a gallon. But which I think is not the best, but we all could. I mean, there's literally like a war, so you'd expect some measure of austerity to be felt by the American citizens. But yeah, oil is definitely, I remember doing like a Romeo prediction where here he called it like during over the weekend. And then he's thinking oil at all-time highs. Like he had like 3 separate oil calls higher, oil going back above all-time highs. But that was before this intervention. and you still had a nice 2023 model that, for all intents and purposes, it still has a lot more time to play out. So let's say if that technically was the low, but just giving a lot of credit here and just extending it. So that's about 65 or 63 bars, just doing the mental math there. But yeah, so we're getting, we could still they're running out the clock. They're running out the clock on this. But yeah, there's I guess there's still room to try to hit the all-time highs. So it's an interesting market. Definitely trade this at your own risk. Absolutely trade this at your own risk. But yeah, so that's pretty much the week in review. Let me show you the loss in natural gas really quick. So natural gas is a 2-week bullish model, and I actually haven't been trading the 2023 turtle soups all that much on the higher time frames, and using kind of higher time frames to inform the analysis. So I'm not really used to it. And here's a mistake I made. So every single one of these candles is 2 weeks, and I kind of forgot this, that every single one of these candles is actually 2 weeks on a 2-week model. And so here you have the origination candle. Well, we could call it, that's probably a good origination candle, right? Because we dig down. Well, okay, whatever. Doesn't really matter. 1, 2, 3, 4, 5, 6, 7. Okay, or it's 8 if you count that one. Okay. Now, actually, let's count that one because that's, we dig into the candle open there. So August 17th is the start of the distribution. August 17th, and last week the week was from August 10th till the 14th, right? So I literally got in early because look at this weekly candle. So I'm literally okay, that weekly candle, that down close, it closes there, right? And then I'm thinking, all right, next week is going to be so bullish for natural gas. And then of course, you get this rip higher on Sunday, and I'm like, oh yeah, and it's this little, that leg there, and then it's almost like an AB equals CD pattern, to get higher there. And it's literally a daily time frame 2023 bearish turtle soup to get us lower. And I completely miss it. So here, I'll go to the daily time frame. So there's the origination candle, 1, 2, 3, 4, 5, 6, 7, 8. So it's 8 daily candles to set up and then 3 daily candles to pay off. And guess what I'm trying to do on Thursday? I think it was on Thursday, or it might have been on late Wednesday. I'm looking for natural gas longs. Actually, I think it was Thursday. So I'm here and I'm trying to scalp natural gas long. I think I'm here. Yeah, I think that's what happened to me. Was I'm here, I'm up here, and I literally get Tory Trades or Turtles, TJR or Alex G or any of the other please fix thanks. And I could probably do a please fix thanks video on this. But I literally get long in the middle of the distribution phase of that daily. It should have been so obvious. I'm literally long late Thursday. And of course, when you try to go long in the distribution phase of a higher time frame turtle soup, you're going to get your butt kicked out of that trade really fast. And that's what happened to me. So yeah, took a loss on natural gas, but that was my loss for the week. That was fine. I had a pretty good week. Not a very fun week to trade, but yeah, it's all good. The market doesn't need to be fun. It just needs to be, giving you opportunity. So yeah, that's a good way to end the video. You can tell I'm itching to do my look ahead, my planning the week to come video. But yeah, it ended up being a 45-minute long video. Thank you for listening and watching, and good luck